Welcome to Growth and Innovation Unlocked. I am Scott Hurst, and today I'm joined by Leigh Eichel, who's the co-founder and CEO of Vee. Vee is helping advisors and asset managers with index construction, model portfolios, and research with transparent, rules-based strategies, and now exploring how AI can power the future of investing. Leigh also brings decades of experience across software, global marketing, and distribution. And since founding V, he's been driving innovation in direct indexing, risk managing strategies, and advisor workflows. So, with that, Leigh, it's great to have you here.
Hey, Scott, thanks very much for setting this up.
Absolutely. Leigh, what then inspired you to start V, and what problems did you see that wasn't being solved for advisors and investors?
Well, when we started Alpha V, we had just done an exit. We had a public company that we built, software company that we had built, and sold it off to another public company. Being too young and still pretty creative, we thought, looking at the indexing space in those days, ETFs were getting off the ground, starting to grow. And now looking back, yeah, ETF as a product wrapper is very, very successful. And there's pros and cons to ETFs. There are some cons. And we thought, looking at the legacy software products that were out there, they really weren't built for the ETF generation or really indexing in general. And these legacy tools were very disappointing to us. So the original team that built the previous company got together. Building software, doing large data analytics is very easy, and we wanted to create a kind of a ETF 2.0 or 3.0 style software that could do something quite different, much easier, much faster. Fast forward to today, we have 15 modules. We have AI portfolio building. We have all kinds of capabilities, automatic fact sheets, portfolio management, etc. So, yeah, it's been a thrill of a ride. And through that, we launched ETFs with large asset managers on Wall Street. We're on, a dozen TAMP platforms and manage 30 portfolios of our own. And we're doing some really exciting work on in the FIA space and creating other model portfolios for clients.
Wow, well, tell us more about that then.
These days, the AI portfolio designer is probably one of the hottest things. So if you think about the workflow for a registered investment advisor, take that segment. Again, we have 15 modules. I'll spend 30 minutes on each module. We're not going to take 8 hours now. So I'll just cherry pick a couple of thoughts. The AI portfolio designer, it fits into the workflow where someone has maybe managed their own portfolios. They have a couple of models. Maybe if you're an advisor, you tend to bucket your clients into conservative, moderate, aggressive, and aggressive, like 5 different buckets. That's very common. And then you stop, and I thought, well, why is that? Why do the wide variety of financial scenarios that individuals walking off the street have to get bucketed in these 5 scenarios? Well, when you think about it more and you peel back the onion, you really look at how people work and you meet with enough advisors, they don't have tools. They don't have a way to take the approved investments that are available to them and then have better tools to categorize them, fit the client risk profile, and build what I'd call kind of a hyperscale or a really personalized index or personalized portfolio that fits that risk profile, and then to calculate it, rebalance it, make sure it's up to date. So a tool so easy that really, just prior to meeting with your client on your quarterly or semi-annual or annual meetings, whatever the advisor does, you can now, within minutes, be prepared, check that portfolio, make sure there aren't better options out there that, again, fit the back end part. So we innovated in a way where we have some of our other modules we have optimizers, we have portfolio management, we have factor libraries, we have access to 50,000 equities, 6,000 plus ETFs, mutual funds, UCITS, so a good size investable universe. Oh, and it's global, of course.
Oh, yeah, great.
Our global SMAs are up over 25% this year. So,
congratulations.
so there's a lot of different components. So if the advisor had managed models, they could use our fact sheet automation to show off their models. They're great. They could put them in our digital dashboard to easily put that content out for other advisors, maybe if it's a TAMP or an integrated advisory firm, or put it out on their website if appropriate. But then taking that approved universe with whatever subset that's available in our database, including their custom models, we can then feed it a risk profile and then generate. You can literally type into a search engine for Mary's account, create 4 or 5 different portfolios that fit her moderate risk profile, and leave 10% cash. And her son works at Apple, so leave 5% in Apple. Go, click go. Minutes later, you have those 4 or 5 portfolios with all the different strategies, all the weights. Then you can say, you know what, this third one looks good to me. Build me a proposal. You click a button, it generates all the text, the description of the portfolio, the desired outcomes, how it should work, plots out all the live track records, and you can even import and say, by the way, what if it's a new client? You don't know Mary yet. You're just getting to know Mary. You can say, Mary, give me your previous advisor's statements and your account statements, and maybe you're trying to win Mary as an account. You can bring that in, and then print out that same proposal and say, well, gee, he made you $2,000 over the last 10 years. Had you worked with me, you would have made $15,000. So the portfolio designer gets used in a couple of great ways in the workflow: pre-client meetings, winning clients, driving up better results for the client, which means better business for the advisor.
Well, that's fantastic. I appreciate you us walking through that and how, and yeah, you're leveraging AI to
Happy
do
to.
that as well. You
Yeah.
talked about, you're really talking about also just-in-time GIT type of, shifting to the market in real time, right? For instance,
Yeah.
this week, is it tomorrow or Thursday? The Fed's going to meet again. Are they
Tomorrow.
going to lower,
Yeah.
25 basis points? They're going to lower 50 basis points? Maybe leave them unchanged. I think the market's already baked in at least some kind of change. You then can do that, right? So you use a unique approach in managing that risk. You look at markets that, this pending, Fed Reserve, meeting that they're having, inflation, job data, sector stock selection. How does that framework then help advisors navigate changing conditions? You kind of talked
Well,
about that a little bit, but
you
maybe a little
you
bit.
yeah, you can go through these scenario analysis rapidly anytime you want, 24 hours a day. In general, I think most advisors, and I would couch them to grip the wheel tight, design your portfolios, not where you're going to day trade them or weekly trade them. For regular retail clients, it's buy and hold and have intelligent growth, but do have some cadence to the rebalance and reconstitution frequency of the portfolio. And really, it's that approved universe of investable instruments. So Alpha V also specializes in, again, we have 2 groups. One group builds software, one group does investment management research. And on it, so if anyone that's on alphav.com, they'd go onto our strategies page for the investment management research, and we're best known for risk managed strategies. And those generally have a view of 3 to 5 year outlooks. So you really don't trade them. You kind of buy, you hold them. The magic happens inside the portfolio of sector selection, managing inflation risk, stock selection, et cetera, and allocations built into the portfolio as allocations between equities and treasuries. So those 4 different risk lenses are kind of managed. And I generally tell people when I'm in those discussions, a 3 to 5 year holding period is appropriate, because you do need the market to dip to buy value, to
Right.
find
Right.
quality undervalued stocks. And so a pullback is generally healthy, and you can boost
It is.
performance if
Yeah.
managed correctly.
It absolutely is. Yeah. The pullback is definitely, don't really have a very large stock portfolio myself, but I have a few here and there, and you
Mhm.
really don't want to buy on the highs, but sometimes the highs then lead to higher higher highs as well too, and that's where working with someone like what your capabilities are can be very, very powerful to help people
Yeah,
manage that
yeah. I
risk.
mean,
Yeah,
take a look at that list on alfie.com/strategies, and yeah, if you're interested, we can put you in touch with a registered
great.
investment advisor.
Well, I appreciate that. Yeah, I will definitely
Yeah,
do
no
some
problem.
more research. I did a little bit, but yeah, you really piqued my interest even more.
Mhm.
So, direct indexing is growing fast. Where does Alpha V add the most value for advisors, whether it's security selection, risk overlays, or tax aware implementation? Is it kind of a combination of all three?
Yes, yes, and yes.
Okay.
So direct indexing is great. We grew up in the ETF world and launching ETFs and building indices. For a while, I did find ETFs almost commoditized advisors. When you have all the advisors picking SPY and VOO and just a couple of different ETFs, and then trying to charge 1%, there's not a lot of value add there. What became apparent, though, is if you could, quote, unbundle the ETF or do tax loss harvesting in combination with certain ETFs, now you're generating tax alpha, and that's probably the easiest alpha to generate is tax alpha. So we have tools and services in place to help an advisor, an asset manager, a product sponsor that wants to launch one of our SMA models in the ETF wrapper. We do all of that.
Oh, great, great. And so, let me change gears just a little bit. Where you know it's very, very important about transparency and publishing methodology. Why is that so
Mhm.
important in today's market environment?
What I have always found, again, growing up in the ETF space and launching public products, is investor transparency is absolute paramount. I do like increased reporting. That's kind of the buzz right now is why do companies report quarterly and not every 3 years?
Right.
You really want to know what's going on within companies. So um, at Alpha V, you'll notice on any of our strategies, larger strategies, we make sure there's a third party audit report. We make sure none of this is required by law for generating an indice, by the way. We publish a methodology document that you do have to do when you have an exchange traded product that's following an indice. We still do it even though we have SMAs. So a methodology report, public calculation dissemination. So you can go on CNBC, go to the top of the menu bar, click on that magnifying glass, type in .AV or type in alpha V and hit search. And then there you go. You'll see all of
Oh,
our
wow.
indices come up. That's all part of transparency. Even if you're working with a registered investment advisor and you have a separately managed account, until Alpha V, those were all black box relationships. You really didn't know how the manager was managing your money and what they were doing, and you couldn't track it. You'd had to wait for your quarterly statement. I think that's ridiculous. I don't want to see, I don't want to work like that. We put it all out there. And if a client wants to compare our SMA index to someone else's mutual fund, more power to you. Go on CNBC or Yahoo or Google Finance, whatever's easiest, or Bloomberg or the Alpha V workstation. Of course, gotta put in a plug for our software.
Absolutely, yes, and that's like what you want me to do. So, what are really your target? What is your target market then, really, for you?
So again, there's two groups. So we have a software group. So the software group looks for anyone that's into portfolio management. It could be a researcher, portfolio director. They could be working at an asset manager. They could be working at a large RIA. So we have clients that are research groups. We have clients with our software that are turnkey, operating turnkey asset management platforms like Virtue Capital Management. Or Symmetry Partners, for example, or software clients. And please check them out. Great organizations. Um, but then, we have investment research management division that are placing our strategies and building model portfolios for larger asset managers, or again, just placing them directly on the TAMP platforms. And then we do direct indexing. So we might have an advisor who's an independent just wants to do his own trade thing. We just have a new small group that we're working with in Arkansas. So not a lot of people calling them. They don't have a lot of easy access, if you will, and can use an experienced team like us to give them some model portfolios. So we'll work with that's a 2-man advisory firm, very small amount of AUM. Happy and thrilled to work with them.
Oh, great. Yeah. That's fantastic. Yeah. And, you mentioned it a little bit, but this concept of, your research platform covers tens of thousands of securities with deep data and back testing. How does that then turn
Yeah.
into actionable models then for
Well,
advisors?
yeah, so an advisor might come to us and say, "Hey, Leigh, this is what I've been working with. I do like the 3 bucket approach or 5 bucket approach. The AI stuff, not yet. Great. So what's the problem? Well, I've been working with all these big name brand managers. They have huge product fees. Could you build me a replica instead of the S&P 500, like the S&P, not to use Standard and Poor's terminology, but the largest market cap 25 companies that drive the performance or 20% that drive the performance. I'll put that in a growth portfolio. Could you blend in some bonds or laddered auto callable to make a moderate? And then for conservative, give me something else. So then I can blend these 3 with different weights for all clients. And perfect scenario. So using the access to all that data, we can select the appropriate companies, do the allocation between treasuries and equities, other bonds and equities, or other ETFs, or just ETFs. There's many scenarios, and that's where we started off with saying forcing clients into 3, 4, or 5 buckets just doesn't feel right anymore, and the tools and technology are there to really scale portfolios and make them personalized. A personalized index, personalized portfolio is another term you hear sometimes. That's now really possible. So that's how we're able to use it but you have to have the underlying data, and we have over $15 million invested in our own software technology that we license.
Oh, great. Yeah.
It's used
Um,
by all kinds. I mean, we're connected to Bloomberg, Morningstar, you name it, SIBO, other exchanges. A lot of it's important.
yeah, yeah, absolutely. Those are some big name players that you want to be a part of because their reach is very very wide and
Hmm.
and
Hmm.
trusted, right? So,
Yep.
yeah, let's maybe go on that vein a little bit more. You've built partnerships with platforms like SmartLeaf, QDeck, others.
Hmm.
What have you learned about meeting advisors where they are then?
So when you're talking TAMP platforms, the most successful TAMP platforms, if you measure success by generating revenue, grabbing market share, generating profits, are the ones that have the most variety on their platforms. That's what I've learned being on a dozen platforms. So you want to have a TAMP setup where you have many, many offerings. So whatever cream rises to the top for the given part of the economic regime you're in, the
Mhm.
advisor can find it. Now, if you can couple that with some of the tools that we develop, now you have a fantastic formula, and I'd be very interested to connect our AI portfolio designer onto a SmartX or SmartLeaf or Adhesion or one of these other platforms. The companies that stay very pigeonholed, we just do tax management. We only have hand curated, bespoke offerings. Whenever I hear hand curated and bespoke, I think small and they're just not going to grow and go anywhere. Or they're just trying to sell their own stuff and they ignore that other people might innovate. And that's a disservice to clients. I almost don't want to be part of that. I'd rather just compete openly because at the end of the day, if the client has successful portfolios and you're growing their wealth, you're growing your revenue, your fees are based around that success, and that makes sense to me, and that's what we want to be part of.
Yeah, absolutely. That philosophy is very very important. I think. Yeah, you got to.
You don't see it everywhere. It gets dressed up in a lot of different ways, but when you got to dig in deep with some of these advisors to understand what their motivations are and what their DNA is.
Yes,
Um,
yeah, 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 yeah. What their motivations are is I like that, the DNA, and really what is their objective in terms of And sometimes maybe, they're small and they have to grow into that, what you talked
Yep.
about, the ideal fit, and that's fine, right? But,
Yeah.
uh, but how you want to partner up with, that's very important to understand that.
Yeah.
Well, great. So, we talked a little bit about AI. AI, it's a hot topic, of course. How do you then see AI? You touched on it a little bit, but shaping research, risk management, index construction.
Yeah.
How's that going to continue to grow in the next 6, 8, 12 months or so?
As data keeps continuously being fed in, it's only going to get better and better. Our experience doing actual coding and software development,
Hmm.
as I described, revealed some interesting things at this stage. So the first thing is the math isn't always right, is one of the things we discovered. So when you actually after we generate results, we do it out longhand on paper, or and if you get wrong math results, that doesn't cut it. You can't be 80% right when you're doing portfolio construction. So we actually have to integrate multiple tools. Like I said, we have our own optimizer, and of course, a team of brilliant developers in Israel. And the combination of double checking the AI, making sure all the numbers match, God forbid something goes wrong and it generates a wrong result, that's just unacceptable. And you won't get that with AlphaV. So I see it only improving the tools, the access, these problems you have with ChatGPT not always giving a correct result. That it's infancy things that
Yes.
will
Oh, yeah.
just, as the
Yeah.
technologies mature, I'm sure it's just going to get better and better.
Yeah, that's been my experience as well too, right? I mean, ChatGPT or Grok or the others as well too aren't like, don't always get exactly right. That's why humans are still very, very important, and will continue to be,
Oh
right?
yeah,
Those
yeah.
nuances.
Got to
Yeah.
do, if you're trying to do some kind of portfolio calculations. Do yourself a favor. Do the math out longhand. The old
Yes.
school way. Just double
Absolutely.
check it. At least audit it a few times
At
until
least
you're
audit it.
convinced
Yes, I
that
like
yeah,
that. At least audit. Exactly. Well, Leigh, this has all been very, very interesting. I think you certainly have set yourselves apart as leading in, in terms of, you're pushing the boundaries of direct indexing, AI powered investing. Again, striking that
yeah,
balance,
yeah,
which you just talked about, which I think is very important for everybody to understand. It's not just AI that, hey, yeah, we'll just sign up for this AI. I see those all the time on my
yeah,
Instagram feed or Facebook feed. Hey, AI will just do it all for you. Okay, maybe, but how can you really trust that? And that's where you want
yeah,
tried, true, tested tools that, what some of what obviously what you guys can provide too.
yeah.
What
Our
yeah,
software, after $15 million and all the different users, is thoroughly beat up, abused,
yeah,
tested.
it's battle
And
test.
really, if anyone out there listening to this has any of the legacy research tools from FactSet or Bloomberg or Reuters, have a look at ours. Maybe we can help augment. You don't have to get rid of what you're used to using, but have a
Even
look
augment. Yeah,
and
I like that. Yeah.
yeah,
Yeah, absolutely.
augment,
And I really
decide.
appreciate that. We definitely, as we wrap here, we really encourage everybody to take a look at Alpha V. So with that, how then can listeners find you and Alpha V, Leigh?
So for myself, it's easy. The email address is Leigh, Leigh, at alphav.com. That's ALPHAVEE.com. Or just go to alphav.com on the website, and there's plenty of contact us links and what have you. Or a general email would be info@alphav.com, and that'll get sorted and routed to the correct department and your local representative.
Well, fantastic. Thank you once again for joining us. And if you have
Thank
enjoyed
you.
and learned something here today, which I definitely have learned a lot. I mean, I have a lot to learn in the financial fintech space, but I definitely have learned a lot. And if you like what you've heard here, please, like, rate, subscribe. And again, thank you for joining us. And I'm Scott Hurst with Growth and Innovation Unlocked.